Hey guys, Doug the retirement guy here. I went to my financial advisor and I said I wanted to invest into a REIT, which is basically a investment into mortgages, into real estate, and so on. And they came back and said VanEck Mortgage REIT Income ETF, MORT, is what they were suggesting. So I wanted to sit down and take a look at it, and I figured there's got to be other people who want to be in the REITs. So I thought, hey, let's take a look at this and see if we can't share some knowledge across the board. Right off the bat, I looked into it and said the yield was 12.45%, which is definitely interesting, is well worth time invested. So looking deeper into this, the VanEck Mortgage REIT does things differently. They invest in the high dividend yield potential by investing in the mortgage REITs with other organizations. So they're not writing mortgages, they're not buying properties, they're investing into other REITs that are in the marketplace. So what they're trying to do is closely replicate the U.S. Mortgage REITs Index, and that's MVMORTTG. And they want to track that as much as they possibly can. So they're not getting the exposure to the interest rates, but they're getting involved in the companies who are doing this investment. So it's a little different animal than I originally thought of. It came out quarterly on the distribution, which again, you can't have everything. You can't have all your cake and eat it too. I would love to see that as a monthly, but it's really set up as a quarterly. Their distribution rate of 12.45%. Their expense ratio was 0.43, which is about fair for a quarterly fund. And then the one that got me was their 30-day SEC yield of 12.01. That was real interesting to me of how they created that income fund, that flow, by using other ETF funds. So when I looked deeper into it, what are they investing into it? And they were right up front. Blackstone Mortgage, Amber Realtor, Ladder Capital. So we did a lot of looking into, and the one that got me right off the bat was Ellington Financial, which we already own shares of, and we know what they're involved into. So these guys are helping fund all the people who are funding loans. So it makes sense of what they're trying to do. So the thing that got me was what they told us was a 17.77% total return. And that included income of the dividends, interest, and capital gains. Now, the 30-day SEC yield of 12.01, I actually asked that with my financial advisor, and they said they show and have a track history of getting income from each one of those funds. And when they're doing it in a quarterly basis, they're able to track and report where they're sitting with. And that's what gives them that higher number, because they can basically, it sounds like, again, sounds different to me, is that they're able to take money that they've already received and say they're going to pay that out next month or into the next quarter. So it's like they already have the money, and that's where they're getting the report from, because the number matches the dividend return almost to a T. So a return on the dividend of 12.45%. So it tells me that this thing should be making about a 5% return plus dividend, and that would be very happy with me if it'd be something nice to add into our portfolio. Like I said, they offered a quarterly dividend payouts, and the fund actually started back in August of 2011. So we have almost 14 years of performance that we can look at this fund and say, hey, is this good, bad, or ugly down the road? And there's so much have happened in the past 11 years. We have 2008's retail market, the housing market crash. How did it do during that? And how did it recover? So when we put this into the 1 month, 6 month tracker, 1 month out, it's -0.6. 6 months out, it's -4.94%. Year to date, they're up 8.35%, which I'm very pleased with since it is early still. 1 year out, they're at 1.32%, nothing spectacular there. And 5 years out, they're at 12.9%. So again, they're green or they're positive in the 1 year and the 5 year program. So it could be just a marketplace with the interest rates as we're at now. It could be struggling a little bit. So what we did is we put that in our calculator and said if I bought 10,000 share or $10,000 back a year ago, what would the fund look like? And it was really interesting to me because the stock at that time was $11.20. We were able to buy 892 shares. And when we go through the fund, we ended up with $360 of increase because the value of the stock went to $11.57. So it's about a 3.62% gain. Plus, we got a 10.98% dividend return of $1,098 for a total return of $1,459 or 14.59%. So I was very pleased across the board with the numbers. And the one thing that changes that dividend is the timing. It's all about timing because they're going to be paying another dividend within 30 days. And that would change my whole number from the 10.98 probably get us back up to that 12% rate. So real hardcore numbers, everything does look perfectly right. So let's take a look at the price adjustments over time. MORT is, I call holding. It's holding its price. And when you look at the chart, and I normally would call this a mountain climber, that you're going from peak to peak. You got to go down to go up. Then you go down again, you go up. You go down a little bit, you go up. But for some reason, this in the October to January timeframe, there was a major drop off. There was a major slide of the thing just losing its value. But it came right back 30 days later, came right back up to the base price. And the base price I call is $11.37, which is the average over 12 months. The current price of $11.57, it's 1.76% above average. So this is why I say it's holding. There may be some roller coaster rides, there may be some climb up to some bigger numbers, but overall, if you can get a 30-day return back after a big drop off like that, it means the fundamentals are there. It's dealing with what's happening with the economy. So when we take a look at the summary, 3.61% over the last 12 months, I give that a thumbs up. Dividend return of that 10.98 over 12 months. Again, I'm going to give you an asterisk on that one. We're going to give you a thumbs up, but we're going to give you an asterisk. According to my reporting, we switched 15 days one way or the other. That's going to be a bigger number because we didn't qualify for that last final payment. So the numbers are right where they want to be. Then the second asterisk of this is, remember, this is a quarterly paid out dividend. And I've always said in the channel, we want monthly payouts. We want that money every month that we can pay our bills. This is a fund. You're not going to pour all your money into it to get the 10% or 11%. What you're going to end up doing is use this to fix a low month. So if they're paying out in March, this is a fund that if you're low in March, you're going to want to have this in your fund. Personally, my fund in February is very low, and I need to build up February. So this fund wouldn't really do it for me because it's not going to grow my February, but it'll definitely grow my March income, which is real close. Stock total return, 14.59% over 12 months. Again, big thumbs up for that one as well. So is MORT good for a retirement account? And the answer is yes. Now, a lot of people are probably going to overlook this thing because they only see a small little 10% dividend payout. But a 10.98% dividend, I personally think is great in a REIT. and especially having some long track history of this, I'd be positive with it. You gain 3.61 value, definitely another add-on to it. So I put this as a moderate buy. I would put this into any retirement fund and use it accordingly. If they would change it to a monthly, I would definitely have it in my account. But since it's quarterly, I got to make sure it's going to fit and work and fix things that I need and that I have to have.